Hey, good morning, traders. Welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, and we're going to have a killer episode today. As we saw yesterday, we had an extra episode, and that was for non-farm payroll and unemployment. And those came in stronger than expected, which gave us a bearish move on the S&P and NASDAQ. And gold tried to move bearish as well, but it had trouble moving lower. And I'm going to cover in this episode why that happened and what we can expect going forward from gold and the S&P 500. So guys, smash that like button if you're ready to make some money today, because Market in the Morning starts right now. All right, guys, let's pull up my screen and let's see what's cooking on in the markets. So first thing, guys, it's okay. We could start with gold. Good morning, everybody. Guys, drop a like, drop a good morning. What's up, Ozzy? Good morning, man. What's up, everybody? What is going on? Hope you're all ready for a great day. So, guys, gold slips to 50.80 as Fed rate cuts bets fade. Now, the S&P 500, gold, both of them were reacting bullish when we had more of a dovish pivot on the Fed. A dovish pivot basically means that they're looking to cut rates further, which would help boost the economy in a sense, right? It would make things a bit more affordable, but it shows that, our markets and is the economy in a position for that. And with the unemployment data that came in, it was saying that no, we're not ready for more rate cuts. So we're going to pull up that unemployment data. Yes, sir. What's going on, Mr. Garcia? Good morning, guys. So initial jobless claims is today. That's at 8:30. We will cover that this morning too. This isn't as big of a impact or a data event like we have non-farm payroll or even CPI. So don't take this one with, oh man, the market's going to reverse. This is not going to give us any type of reversal. However, it is important to look at the minimum, maximum, and the forecast. So for initial jobless claims today, the forecast is 222,000. The prior was 231,000. And the minimum, so here's the range we're looking for, is 210 to 243. So if we see it on more of an extreme scale, yes, that will give us a bit of an impact in the market. But if we stay within this range of 210 to 243, most likely not going to see that big of a move. So initial jobless claims. Initial jobless claims measures the number of individual filings for unemployment insurance for the first time. So again, this isn't the biggest of catalysts. However, it adds to things like non-farm payroll, unemployment, because these are the people that are initial jobless claims, right? People are filing for unemployment for the first time. So shapes Fed rate pause decisions. And down here, guys, with market, it makes it so simple to really understand, like, well, how is it going to impact the market? Because right here, it tells us if it's above the range, we're looking for a bearish impact on the dollar, which would be a bullish impact on gold. Yeah, man. Jev's missing in action today, bro. Guys, drop a like for Jev. He is homesick right now. He couldn't make it to the market studio over here for Market in the Morning. But that's all right, man. We're sending him tons of love. One of the best traders out there. Everybody here at the market team is. And that's why we were able to create such a great software for you guys. Because we know what is impacting markets and how it's going to reflect and how you guys can take action with it. So higher claims weaken USD via dovish Fed pivot. So guys, we're looking for above for dovish, right? Now we could pull up the Fed Watch tool. We could take a quick look and see where it's currently standing right now. So right now, look at this, guys. March is only sitting at 5.9%. If we come to compare, yeah, Jev's the GOAT, man. If we come to compare, look at this. A week ago, for March's rate cuts, we were still sitting at around 23%. So it wasn't the strongest. We weren't seeing a massive recovery or a 50%, like a real strong positive outlook, which would bring optimism, a bullish market. But we at least had a little percentage on the table. Now that has been completely destroyed down to less than 6%. And even April, same situation. We were sitting at 35% by April. Now 20%. So things are really starting to drop, but they're not dropping it to zero. Something to really acknowledge is we're not dropping to a major low. We are still somewhat pricing in possibly a few rate cuts. If anything, at some point there were headlines about 100 BPS by the end of the year. So when we come over to high impacts, We could look it up and see if, let's see if we could find it. 100 BPS. No, see Russia, US. No, nothing. I can't find anything quickly here. But there were talks of 100-point. Yeah, what's going on, Milo? 100-point rate cut by the end of the year. Now, even though Powell is still our Fed chairman and he's still a bit more hawkish, we have a new Fed chairman coming in about May when Powell's term runs out. Guys, this year is midterms. Make sure if you're here in the US, you go out and vote. Powell is hey, we're hawkish. I'm not too sure. The economy's holding pretty solid right now. There's no reason for rate cuts. Great. Next Fed chairman we have is Kevin Warsh. Kevin Warsh is historically known to be a bit more hawkish as well. So yes, he's more hawkish. That could be a bit more bearish for the market. Less rate cuts. However, he's being handpicked by Trump. There are some other situations going on. So yes, he's more of a hawkish Fed, but will he be a bit more lenient and be a bit more open to listening to what the president has to say? Now, guys, as traders and as investors, we know that the Fed is completely separate from the government. So we wouldn't want that impact to really follow through. But as traders, we can't control that. So we can only react to it. So what are we going to do? We're going to be patient, see how things play out, and trade the news, trade the headlines. That's what we do here with Market, guys. Speaking of headlines, let's check our live news feed today. See if there was anything high impact that could really be impacting gold or the ES and NASDAQ. So look at this pullback level, guys, 51.44, right up in here on gold, and it tapped it perfectly. Great market levels. Guys, market has so many phenomenal tools. I mean, they have annotations on the charts to show you why markets moved the way they moved and where they moved from. It has key levels, pullback areas, targets, anything you could think of to understand why markets are moving. MRKT has that for you. So Ukraine's military says it struck Lukoil's oil refinery in Russia. So that might have an impact. Yo, what's up, Nicholas? Yes, sir. Good morning, bro. The whole market goat team is showing up. Bah. So nothing major on the news catalyst right now. Ukraine Air Force warns of likely launch of Russia intermediate range ballistics missile. So really just the whole Ukraine-Russia tensions. And guys, what that's going to do, think of it right away. Tensions, uncertainty, that's where we go to a safe haven. Where we have tensions, we want to be safe. We have uncertainty, we want to feel safe. Gold would be the safe haven then. Now, somebody asked me yesterday, I put out a video yesterday going over why markets moved the way they moved. And somebody asked, well, if we had that bullish of an impact on the dollar from yesterday's unemployment and non-farm payroll, why didn't we see a strong bearish move on gold? Well, the answer to that would be we did initially get that reaction. I'm going to show you guys right now. Guys, let me know how you like the charts. Lightened it up a little bit. So yesterday's non-farm payroll is going to be right over here. So I'm sorry, yesterday was Wednesday, right over here. Let's go to a 15-minute time frame and it'll be a bit more clear where that data came in. So we had right here's our 8:30. Look at this big wick. So there's our market reaction, right? Our gold safe haven reaction to a bullish dollar, but gold would be bearish. Now they don't have to go directly inverse to each other. They correlate in an inverse direction. However, gold is still a major safe haven asset around the world. Guys, we are going to look at the initial jobless claims in just a moment. However, the reason gold was able to sort of hold this bullish stance is because look at all of these other economic factors that are going to hold gold more bullish. We have Russia launching 24 ballistic missiles, 219 drones at Ukraine, Ukraine Air Force, explosion sound in Yivik. My apologies. Kiev under Russian missile attacks. China's central bank extends gold purchases 15th month. That's massive, guys. China's central banks have been buying gold. Not to mention the US central banks have also been buying gold. So central bank gold purchases at record pace through 2026. US-Iran nuclear talks continue. Guys, this is geopolitical tensions. This is banks buying gold. Geopolitical uncertainty. This is all helping gold stay higher. So even though we had one economic event yesterday that wasn't too strong, that would give us a bearish reaction on gold, we didn't get that because of all the other catalysts. And it's super important to use a tool like market So you're not blindsided. If you're using something like Forex Factory, it would have told you about the data. You would have had to figure it out yourself. You would have said, oh, look, it's reacting bullish on the dollar. Let me go short on gold. And what would have happened yesterday if you went short on gold? You would have gotten destroyed multiple times. So at this point, you want to use a tool like market to get the overall picture, not just one event at a time. Guys, initial jobless claims did come in within range, 227. The forecast was 222,000. It is above the target, but it's not above at a strong point, right? We mentioned that we want to watch the range. So we had the range between 210 and 243. Right now, 227. That's dead smack in the middle of the range. And again, a bit above forecast. And if we're above forecast, yeah, above forecast, we see that, hey, look, above forecast, bearish on gold. Well, we could take, I'm sorry, bearish on the dollar, bullish on gold. So now what's going on, guys? We're getting sort of multiple factors coming in saying, hey, listen, now we have unemployment supporting gold. Now we have the uncertainty. Now we have all of that economic and geopolitical tensions going on. So what do? All of these factors coming in, giving us a bit more of a bullish sentiment on gold. Well, we're going to look to see, can we target that next level, 51.45? And that's exactly what I'm going to look for today. Guys, myself, I like to mark out that market level, and I will double click it, and we'll just call it MRKT, so I know exactly what level we're looking at right there. Make it yellow real quick. Fantastic. Now, again, we're not looking to buy when we're moving higher. We're just looking to trade the range. And as we see right now, the bottom of our current range is right near 5,070. If you were on XAU USD, which is the Forex equivalent of gold, still be very similar price action, and it would be around 50,050. So that's the area I would look for possible longs on gold today with the correct economic data that we're having, and of course everything that we're seeing with the big with all the uncertainty and geopolitical tensions. So possible gold long with support of fundamentals. We could now take a look at the S&P and NASDAQ. Now, the S&P has been extremely range bound, right? Been seeing that we've been trying to climb higher, but what happened since this is now last Monday? So Monday, Tuesday, Wednesday, here we are Thursday. This whole week, we have been within 7,000 and 69.40 on the ES. Something I will note right away is when we were moving higher on this whole rally, we weren't really creating proper supply or demand. Now, what I like to look for, guys, as a trader myself, we have to look for a few things, right? We want to know what's fundamentally moving markets, and we want to know if the move was supported, not just by fundamentals, but possibly some technicals too. Everything lines up. Everything has to come together. The last area of support I really see on the S&P would have to be this one down over here, around 6,900. This 69.50 was a very weak spot. It held a couple of times, but we did end up overall breaking it. So I would be looking for some more bearish reactions on the S&P today. But now, guys, what do we want to do? We want to make sure our economics, our fundamentals line up with that bearish technicals. So S&P 500 holds near 69.80 post NFP beat. Tariff de-escalation aids as PPI looms. This is all major right here. Guys, this one headline alone gives you more information than almost any other fundamental tool out there. S&P holding near 69.80 post NFP, so NFP was a beat. Tariff de-escalation. Tariff de-escalation is massive for the S&P and NASDAQ because those markets, the US markets, really hold on to tariff news and Fed news like it's moving markets. So if we do have some tariff de-escalation here, that should help us in a bit more of a bullish sense. Yeah, what's up? Welcome. Yes, sir. I think we're on a range today, and we may be getting better moves tomorrow as market participants are waiting for CPI data to be released. CPI data drops, that will increase rate cut expectations. Yo, you know it, bro. Let's check it. Important to prepare for all news we have. So CPI, we'll check our month over month. Now CPI, like you said, above would be bullish on the dollar. A reading above would suggest sticky inflation supporting USD strength and pushing rate cut expectations further out. So that would be above. But if we're below, would signal disinflation supporting earlier cuts. So remember, CPI is our inflation gauge. Now, we don't want to cut rates if inflation is hot. If we cut rates while inflation is showing it's hot, it's going to really pressure inflation. When we're cutting rates, what it's doing, guys, it's actually adding to the inflation gauge. So we want to be extra careful. They cannot cut rates if CPI, PPI, any inflation data is coming in hotter than expected. So the range we're looking at on CPI tomorrow for month over month is going to be between the, let's see, so minimum 0.1, maximum 0.4, and bank forecast is 0.3. Now, where was prior was also 0.3%. And what's cool, one of my favorite features, and you'll hear me say this all day because every feature is my favorite feature on market, but is the historical chart for the economic data events. And this gives us a little insight into, hey, have we been consistently on an uptrend, consistently on a downtrend? We saw with non-farm payroll, let's see if I can pull that up. From non-farm payroll yesterday, we saw that it was on more of a downslope. So let's see if we can pull that up. NFP. So look, it was on a strong downslope until December. From December, we have been increasing, and our moves to the downside have really been a bit more minimal. So something to keep an eye on is non-farm payroll and unemployment possibly turning around here. And it's important to know that as a trader, because in hindsight is always going to be 2020, but in right now, we want to know what's going on in the data so we can know what to expect from the Fed, what to expect from the Fed watch. Instead of waiting for it to happen, we prepare ahead of time and then react. So really important stuff here. NFP coming up to highs we haven't seen probably since July of last year. So again, real strong on the non-farm payrolls, and unemployment also weaker than expected, which would show strength because a lower number would mean less unemployment. And same situation where unemployment was rising higher up until December. December came out, we started pushing lower. Now, the question becomes, and this is a question I like to ask myself too with some of these data events, is are we going to find these events revised? I'm not sure if you guys remember, but it's February now, probably 4 or 5 months ago, we had jobs data come out. Came in super strong. It was looking great. And then what happened? Boom, it got revised. They took off they took over 200,000 jobs off of the data just a month or two after the event was released. So it comes a question that is the data we're seeing legit? Unfortunately, the Fed watch, all of this is going off the data regardless, whether it's legit or not. So that's all we care about. But as traders and as people, we want to just be aware of any possible circumstance. Guys, drop some tickers. Let me know if you want to cover anything. We cover the S&P again just to look and see. ES edges higher, 69.8450 from 69.78 amid ongoing tariff relief. Guys, there's that tariff relief from House Canada vote and Trump sheet talks. So UK GDP weak at 0.1% quarter over quarter, but supportive rotation intact. Now, this right here, escalating Ukraine and Russia strikes add risk off pressure, countered by value outperformance. PPI jobless claims, Fed path repricing, cuts fell to 57% in June. So let's come over to our Fed watch, check out our June, and see that. Look at this. It went from, here we go. Oh, not too bad. Not too bad. The current for June is actually at 49% right now. So at some point it was higher, but 49% is where we're sitting for a possible June rate cut. Because right now this is our current range. We're sitting between 350 and 375. June 325 to 350 is now at almost 50%. So that would be pretty solid. Again, showing a little bit of optimism, but it's really going to depend on how the asset classes and how the data comes out through the next couple months. If we get strong economics, strong unemployment, and strong non-farm payrolls again for March, for April. Guess what? These odds are going to decrease and decrease and decrease. So stay patient, watch the data, and just trade the now. If we're day traders, we don't want to really focus too far out. We want to know what's happening right now. So S&P, what could be helping us stay bullish? What could be helping us stay bearish? Failed breakdown set up Thursday, bull trap shorts 67.73. Value stocks outperforming tech rotation. That is something to mention. Value stocks are outperforming tech, so that's going to make it much harder on the NASDAQ to continue higher today. House backs ending Trump Canada tariffs. This is huge right here. This is probably one of the #1 headlines, sort of #1 pieces to keep an eye on, is that House backing Trump Canada tariffs. We can look to see if we could find that here on our market. Let's look up Canada. Here we go. U.S. House backs resolution that would end Trump's Canada tariffs by 219 to 211. That's great. So, okay, well, what does this mean? If I'm new to the market, I'm new to market, I don't know how to read a headline. How can I read this? Well, every little brain icon's going to break it down for you. The House resolution passing 219 to 211 to end Trump's Canada tariffs represents a significant legislative rebuke. Through practical impact is limited since Trump's vetoes is highly likely. The narrow margin reflects deep congressional divisions and business pressure over inflation concerns. Markets may initially rally on tariff relief hopes, but the veto threat and ongoing trade uncertainty could limit sustained gains. Guys, that right there, again, this is why we break it down. This is why we use market. The veto threat and ongoing trade uncertainty could limit sustained gains. I want to know that because if I'm a day trader and it's looking so bullish right now, we just had tariff relief. Well, wait a minute. If we are looking bullish right now, we had tariff relief. But if we start to fail, why did we start to fail? Now we know. This signals potential constraints on Trump's trade agenda ahead of midterms. Guys, midterms are massive. I mentioned this earlier. If you're here in the US, make sure you go out and vote. Midterms are coming up soon. Supporting risk assets near term while highlighting persistent policy volatility. Midterms, guys, historically are much harder on the markets. They historically are weaker, worse years for the markets. However, with Trump being in presidency, we know the impact he causes on the stock market, and that could really be impacting us, guys. That could make a huge make or break. Everyone, I forgot to mention this earlier, but definitely drop a like. If we run this up to 30 likes, I'm probably a little too late on this announcement now, but run it up to 30 likes, and we will cover CPI. I'll do an extra stream tomorrow for you guys here on Market too. Somebody write that in the comments. Let's hit 25 likes, and we'll run an extra stream. So no big headlines other than the Canada and US trade relief, but we know that that might not last long. So now that we went over the bullish catalysts, and we know that the bullish catalysts really aren't that strong supporting the ES, what could flip us? Strong non-farm payroll, reducing cut pricing, this right here. #1 thing. So I've been looking forward and talking about all day. Traders cut Fed rate cut odds by post jobs. Yeah, I hope you know it, bro. You know it, guys. Make sure you hit that like button. Let's see. Traders, let's see. CPI upside risk above 2.5 expected. So, guys, right here, traders cut Fed bets post jobs. We want to know, are they staying more hawkish? Hawkish is bearish. We want to see that continue. Tech sector under pressure from AI capex concerns. Guys, I covered this yesterday. What capex is? It's their spending on AI. Now, a lot of companies were having troubles and thinking that, oh, we're profiting off of AI. This is doing great. That's phenomenal. Awesome. However, they were doing great. They were making a lot of money. But companies like Amazon, and I'll show you right now, Amazon's a big one in AI. Their spending is increasing like crazy. Yay, good morning. Good morning, everybody. So Amazon had a capex of $200 billion. So capex expected of $200 billion for 2026. That is massive. Their expectations for this year from last quarter was 150 billion. So that's over a 20 to 30% increase in how much the company's spending. Now, that alone is going to throw investors in a loop. That's going to make people sell out of Amazon, worried about the company. I don't know if it's going to be able to hold. That's a lot of more spending. But not only is the company spending more now, but because it's spending more on AI, which was one of their best ROIs because AI was so cheap at some point, now that it's becoming more expensive, that return on investment area is now taking a hit as well. That drives uncertainty. These are all of the clues we look for to say, hey, listen, we're getting uncertainty in tech. We're getting uncertainty on tariff reliefs. We're getting uncertainty in our economic data. This is the type of catalyst and the type of market conditions that can move us lower. Yep, later, bro. Later, man. Yeah, go take care of Jeeve. Tell Jeeve I say I hope he feels better, man. Guys, make sure you hit that like and subscribe button in here. Jeeve usually joins us for these streams, but he wasn't feeling too well today. So what was supporting the bias bearish on Amazon? Now, the reason I am going through the specific ticker is, again, to give us a bit more insight into what's going on in tech, and then we will cover NASDAQ too. So trailing 12-month FCF down 71%. Negative FCF expected 2026. Q4 earnings per share missed by just 2 cents. And CEO and insiders sold 10 million in stock in the recent months. Again, this could have been sort of that, not insider trading, but they do have more knowledge than us that, hey, they knew CapEx was going to come out much higher than expected. So what could flip us? AWS backlog surged 40% year over year to 244 billion. So that right there is massive. 40% increase in the past year over year for AWS. Custom silicon at 10 billion annual rate, triple digit growth. That's huge. FCC approved 4,500 LEO satellites. So nothing major. There's nothing here that's screaming, hey, this right here is going to reverse Amazon. This is a bigger catalyst than all of these. Nothing is telling me that right now. We can take a look at the NASDAQ, and it's going to give us a similar read that, hey, we're seeing a lot of skepticism because investors are worried about that massive AI capex. And it's not just Amazon. Amazon, Google, Nvidia, and Meta. These are the 4 large cap tech companies that have massive AI capex. I'm talking over 600 billion in total from those 4 companies alone. Guys, run the like button up. We're about 7 likes away from hitting 25. We will go live for CPI tomorrow if we hit that. Because of this, guys, I'm going to be very hesitant on taking longs. When we're looking for trades and we're day traders, we want to know from an investor standpoint, are investors in a fear right now, or are they in a greed right now, right? And we could sort of take a look at that and see where we're sitting at. This will probably update and come towards the more neutral outlook or a bit more cautious outlook, but we will have to see. Let's see. Yo, good morning. Yay, what's up, man? FXMR, good morning, bro. Appreciate you coming in here. Guys, I do want to take a quick look, and what's great with Market 2 is their backtest analysis tool. So what we see with market on gold is we've been sideways. There's nothing going on here. Take a look at the NASDAQ, same situation. But what I would like to know is what was driving us lower on this big down move over here, right? We saw some major selling. If there's a catalyst in here that I see could repeat itself, I'm going to look for that to again repeat itself. So this bearish move on NASDAQ was brought to us by weak ADP employment, not unemployment. Weak ADP employment changed 22,000 versus 48,000 consensus. Pre-market reaction to disappointment. Yes, sir, bro. We got people everywhere. Man, market's taking over. That's why you guys got to run the like button up and show some love. Make sure you're subscribed. Guys, market in the morning is usually Tuesdays and Thursdays because we do usually get economic data on both of those days. Don't always, but it is important that we come on and sort of give you guys a breakdown. I like the Tuesday shows to get you guys prepared for the week, and sort of Thursday to follow through and check up on that economic data. And as we know, and as you guys should know already from joining, we get initial jobless claims every Thursday in the market. And that's another reason why it's not the biggest impactful economic data set, because it comes out weekly. Those monthly reports are a lot more important. So right here we saw it was weak ADP. We could hit this candle. We see Fed Moran says monetary policy too tight. Now this was a dovish shift. What I would like to know is why we sold off from there, because dovish usually requires us to be a bit more bullish. But look at this, our broader risk off from US-Iran tensions. So it seems like right now the Fed, because of how 50-50 we are, 1 minute we're dovish, 1 minute we're hawkish. When we have a stronger risk off sentiment like that US-Iran tensions, that's going to have a bigger impact. And right now, guys, that's what we're currently seeing. So let's hit our current candle on NASDAQ, see what it tells us, and then we'll go over some headlines too. See, reaction to U.S. weekly jobless claims missing expectations, pre-market reaction, Asia session risk on with Gulf stocks gaining on earnings, futures inching up ahead of U.S. data releases, and nothing really major. Nothing major there. Guys, drop some tickers, man. I'd love to know what you guys trade. We could cover the Dow, the NASDAQ, gold, any ticker you could dream of, you name it, we got it. Market covers everything. Let's take one last look at gold. And got any questions, guys, please feel free to let me know. Market is fantastic. We've got great tools, great filters to make everything a lot more smoother. And what's great too, guys, is you could have market up and you could turn on the high impact audio alerts. And what that's going to do is it's going to play this noise. Let me know if you hear it. Plays that noise every time there's some type of big headline or big economic event coming out. Very important you guys keep that on, because if you're taking a trade, you're on your broker or something, and you might not be glued on market, let's say it's out of the picture for a moment, well then, hey, you now get that alert, you're able to check it, and you're able to take action on it. USD CAD, let's take a look. Yeah, we could take a look. USD CAD, I got you, bro. Especially with CPI coming out. Yo, FXMR, hit me up, man. Maybe you'll join us for market in the morning tomorrow to cover USD CAD and see how CPI reacts on it. Always good to have a guest. Always good to have somebody to talk with. So USD CAD, you see stable at 136 after U.S. House backed resolution of the Trump-Canada tariffs. This is something we mentioned. This impacts the ES and the U.S. markets, just like it impacts Canada. Supporting CAD, Bank of Canada holds rates while Fed rate cuts priced at 80% for June, creating policy divergence. So we see that we're getting a cut in Canada, and we're not getting a cut in the US. That's that divergence. Canada's unemployment improved to 6.5% versus the 6.8%. That's actually quite the steady increase. Oil prices stabilize after Iran-US tensions ease, so we do want to just keep note on that, because unfortunately, US-Iran tensions, it's a very sensitive subject and very sensitive headline. Just like that, one little thing can change, and we can get a tweet from Trump saying, the US just bombed Iran again. It could get any type of move or any type of reaction, and that's why market is so important, because of those quick headlines. Q4 GDP disappoints at 0.1% quarter over quarter, adding risk off pressure. So yeah, looks great for bearish momentum. Yep. So House backs resolution ending Trump's Canada tariffs. Majority U.S. House supports Trump ending tariffs. So those headlines, and then the unemployment rate improving as well. What could flip it more bullish would be Fed rate cuts priced in. Fed Moran's rates approved a bit lower, appropriate a lot lower now. And U.S. non-farm payrolls also beating. So any bullish sentiment is going to be bullish for the dollar, the USD CAD. Again, what's cool, we get to sort of increase the screen here, and we could click a candle and see what was happening this morning. Yeah, exactly, bro, exactly. You can adapt your positions based on the headlines. Guys, we smashed 25. We will be going live for CPI tomorrow. You guys are awesome. U.S. jobless claims worse than expected, strengthening USD less. So it should just say weakening USD. Low liquidity, early US sessions with thin volume. Guys, something to always keep an eye on, whether you trade gold, you trade the ES, the NQ, Forex, USD, CAD. When there's low volume, it can get very tricky. Low volume, easy manipulated, easy little spikes can come through. So be careful on that. No Canada-specific catalyst present. So not much going on there. Like Omar said, further confirming that bear trend at the moment. And what's cool too, guys, with market is it gives you that swing trade analysis, which is these are all daily candles now. We see that we're creating some lower highs and lower lows, and a day trading analysis to give us an hourly time frame, see a bit more fine-tune what's going on in those candles. So, most recent headline we had 3 minutes ago, Russia's Volgograd refinery has halted oil processing on Wednesday following drone attack. Now, that's something that could have an impact on oil. That would be CL for oil futures, crude oil. But we see it had a bearish impact, and that's sort of it for now. Yeah, we definitely need core CPI as a final catalyst for short. That would be great, man. 100%. It's funny. I'm glad you mentioned that. Markets move on volume, right, guys? Markets won't have volume without a catalyst. A catalyst could be anything from CPI data, from non-farm payroll, from economic data, from geopolitical tensions, to nominations, to elections. Anything that's a major headline that will show up on market can be considered a catalyst in the right market environments. And that's exactly what we want to look for as traders. We want to look for the right catalyst in the right market environment. Let's see. So yeah, I'm definitely going to be looking to trade that range on ES. Probably going to look to see if we can sweep previous day's high and reverse again. So we see that yesterday on the ES. See if I can pull it up for you guys. So yesterday on the ES, remember guys, this is funny, man. This is beautiful. Yesterday CPI, NFP and unemployment, guys, came out over here. We had a bullish reaction at first. We were doing our pre-market. We were doing our market in the morning, and we said, listen, that came out bullish. Sure, that's great. We're getting a bullish reaction, but it made the Fed more hawkish. When it makes the Fed more hawkish, that's a worrisome because that would result in a bearish move. So once we found supply up here, I actually took a beautiful short off of 7,006. I took profit near key levels 69.87. Really clean trade. Obviously, we ended up moving another 60 points. That's over 260 ticks on the ES. Massive move right there. But what did we do yesterday, guys? So this was yesterday. This is Wednesday. This is Tuesday. Wednesday, we swept Tuesday's high, hit a supply zone, an area of rejection, and reversed. Today, I'm looking for the same exact setup. I'm looking to see, can we break our previous day's high, which is now at 7,011, sweep that and come lower. Right now, the S&P is looking like we're trying to move higher, so this is the trade setup I would like to look for on the ES. I know a lot of people are going to be buying the highs if markets open and go bullish. I'd much rather fade them. So let's see. So we'll look for a trade setup somewhere over here. And guys, look, we're just trading the range. I'm not looking for a massive breakdown move that's unrealistic and unheard of to look for. I'm just looking to trade the range. I want to sell the highs, buy the lows. Now, that doesn't mean I want to actually buy the lows. What it means is I want to get out at the lows. The saying sell the highs and buy the lows is to help traders know and understand how to trade a range. When we are looking for a bull market, so let's see right here. Let's say I was looking for longs. Let's say we did have bullish fundamentals. We were creating higher highs, higher low, even created a little bit of a higher high here. If we fail to come back below this low, guess what? We're going to be creating another higher low. And if that's the case, we might make our way back towards another higher high. That's how a trend works. Higher lows formed, higher highs formed. Higher lows formed, higher highs formed. At this point, if we fail this high, that will be a lower high. Well, actually, remember, I was looking for a sweep of that high. So I want to see a sweep of that high, and just to see us stay within this range. Right, very range-bound price action without a proper catalyst like we tried to have with NFP and unemployment. We're not going to go anywhere anytime soon. So guys, that's what I'm looking for on the S&P. I'm looking for shorts in supply off of the rejection of that previous day high. I am looking for possible shorts on NQ as well, and then possible longs on gold with proper support. Right now with gold, we were looking at some decent fundamentals to keep us bullish. We see gold steady because of the Ukraine-Russia strikes and a lot of uncertainty. And of course, the public banks buying. Banks are buying gold like crazy right now. There's tons of uncertainty. In my opinion, gold and silver are going to make their way back to all-time highs again. It's just a matter of time. So, guys, that's our setups today. I appreciate you all for joining. This was Market in the Morning, and I will see you guys tomorrow for CPI. It's going to be another great episode. Very excited about it. So make sure you smash that like button, hit subscribe, and I'll see you guys tomorrow. Take care, everybody.